Good morning, everyone, and welcome to the European crossover webinar. And it's nice to enjoy the 3-day weekend that we had here in the States with Labor Day. And it doesn't appear we've moved too much from where we were. You can look here with the euro. Let's go and take a look here with the cable. We did dip a little bit further here. I mean, from Monday, we did go and extend the loss a little bit further. We stayed relatively quiet here in euro. Take a quick look here on the Aussie dollar. Pretty quiet look here in the Aussie. And pretty quiet also here in the dollar yen. The only one where there's looks of any real significance was cable. Let's see. And dollar CAD looks still a little bit higher today, but yesterday, very, very quiet session. Still overall relatively quiet. So a relatively quiet start overall, although we're seeing cable extend its loss, and even from yesterday was had a little bit extra movement there in cable. Let's just go in and take a look what we stand here on economic data. So we did get Italian retail sales that just came out, excuse me, and down minus 2.2%. And, excuse me, and at the top of the hour is going to be final employment, Eurozone employment. And as we roll into the States, we do have employment trend, but relatively quiet session as far as data. And then as we roll into the next day, New Zealand manufacturing sales and consumer sentiment. That's Australian consumer sentiment right there. And then the very next day will be tomorrow. Let's see here. No significant European data then. On the 9th, we do get JOLTS job openings. And now, obviously, the ECB meeting is going to be key. There we go here. But light on European data overall. With that, we'll go on and take a look at the stories. Forex bides time ahead of the ECB, or the dollar bides time. Brexit woes hitting sterling. The dollar held steady on Tuesday as investors weighed whether an accommodative turn from the ECB later this week could hit the euro, while the pound nursed losses due to the Brexit uncertainty. A day after thin holiday trade, the greenback was slightly stronger against a basket of currencies at 93.12. And firm marginally against the euro. Moves in Asia were modest, but had the dollar back under the gentle pressure of risk appetite appeared to return to the equity markets. The Australian dollar stood at 72.76, and the New Zealand dollar was little change at 66.85, having hit lows overnight on Sunday's statement from the central bank, which again raised the prospect of negative rates. The main focus from this week is on the European Central Bank policy decision on Thursday. Most analysts don't expect a change in the central bank's policy stance, but are looking at the message of its inflation forecasts and whether it seems concerned by the euro strength. The meeting comes after the single currency marked a two-year high just above 120 at the beginning of the month, until comments about its level from ECB chief economist Philip Lane knocked it lower. The ECB could raise more concerns about further appreciation of the euro and make some downward revisions to inflation projections, said Commonwealth Bank Australian currency strategist Kim Mundy. In our view, the dollar can lift further over the remainder of the week because of the possibility the ECB takes a sharper dovish turn. Elsewhere, the dollar faded against the Japanese yen, and talk of snap elections, something that Yoshida Suga, front-runner to succeed Shinzo Abe in next week's leadership ballot, signaled in an newspaper interview. Analysts say many currency market participants no longer consider the leadership race as a catalyst, as the next leader is likely to follow Abe's policy path. Around 8 years ago, when Abe took over, the yen was stronger, around 70 per dollar, but with the current dollar-yen level, there's nothing much the successor can do currency-wise, said Daisuke Kalakuma. The stronger local equity market should be more of a concern instead, he said. The British pound, meanwhile, was a laggard, and the fresh crisis in the EU-UK trade negotiations. Financial Times report suggested that the Britain might legislate to override its Brexit withdrawal agreement, prompted the EU to warn there would be no deal if it happened, and raising the prospects again of a hard Brexit. Pound edged 0.2 lower to 31.46 after shedding 0.8 overnight, and set a fraction above a two-week low against the euro at 89.67 pence. Some traders also sold sterling against the yen, last trade at 39.63. However, or hovering near a two-week low of 39.58 hit in the previous session. The key question for the markets is whether the remarks are still mostly brinksmanship as negotiations near the finish line, said NAB economist Tapas Strickland. The mild market reaction suggests markets think so and still sniff a deal. And let's secure ECB. No cause for ECB alarm over euro strength. How concerned should policymakers be by the euro's rapid rise to the 28-month highs? Those tracking currency effects on growth, inflation, and exports reckon it's still some ways off of levels that should start to dent the economic recovery. Since mid-May, the euro has risen nearly 10% versus the dollar, and futures markets show it has drawn a record number of bullish or bearish bets. No, and actually, bullish bets, do apologize. On a trade-weighted basis, the gaze to watch by the ECB, the euro is nearly up 5%. That pace of gains was last seen in mid-2017, a time of optimism about economic growth that marked contrast to the current depreciation that coincides with the deflation and recessionary impact of the pandemic. And inflation turned negative in August for the first time since 2016. Some economists placed the blame on the euro and piled on the pressure of the ECB to act. ECB chief economist Philip Lane delivered the first salvo, saying the exchange rate does matter for monetary policy, while the Financial Times quoted unnamed ECB sources as saying the euro strength was concerning, yet may be premature for the ECB to announce any steps at a September 10th meeting. Euro strength stems solely from the U.S. assets vanishing interest rate advantage over Europe, but from the improved sentiment towards Europe's proactive response to the COVID, including a $750 billion euro fund, ceded by the joint debt states. ECB member Isabel Schnabel told Reuters he was not worried about the exchange rate developments. A weak dollar usually lifts the global trade and growth and offsetting the euro's effect for the local firms. Numerous analysts, Jordan Rochester, agreed that the euro was set for good reason, and a strong currency due to the positive macro fundamentals is not that much of a bad thing for the policymakers, and its inflation impact is temporary in nature. So the ECB still has no room for complacency, and in common with other central banks, it may be forced to rethink longer-term monetary policy given the U.S. Federal Reserve's landmark shift toward a more tolerant inflation stance. But as of now, the euro's rise should not inflict major damage. At current levels, a trade-weighted euro would take 1/10 to 2/10 percentage point of ECB inflation projections in the coming year. And this is bad news in a deflationary environment, but not the end of the world. So there we go on that. See a little bit of a pullback here in the NASDAQ. With that, let's go on and move into the analysis. And starting out with the euro dollar. Now, the euro capped off the prior week with two back-to-back hammers. Resistance for next week will be 1870 with a close below support level 1787, opening a possible challenge to 1658 with prospective longs stepping in at 1714. So resistance we do see here would be up to 1870, maybe even paired in a little bit right there, but this is really the key level there if it were to make a run. So we'd have to stay with that 1870, and then on the downside we're looking at 1787. And on the cable, so cable posted a solid rebound off the lows on NFP day, but resistance to start the week will be 33.30 with support at 31.84. But obviously, we're even pressed beyond that here at this point. So we've taken out the 31.51. Do have some volume coming in here. Let's go and take a look here on a 2-hour chart. right there. $31.21. And resistance on the bounce back be right there. 32.53. And let's go move on to the Aussie dollar. So the Aussie rebounded from the NFP break as overall risk came back. Resistance will be 73.15 with support at 71.93. Well, we've actually kind of stayed in the middle here. We did see that nice rebound, so the resistance will be 73.15, but support, let's take a look at 73.15. It's already had a pretty good down move. I'll tell you what, we'll just go with this, just barely taking out the stops here and go with 72.30. And on to the Kiwi. So the Kiwi recovered from his break on NFP day to close above 67 cents. Immediate resistance will be 67.40. Support would be 67.40 followed by 67.70. And support would be 65.55. Let's take a look here on a 2-hour. Trading relatively quiet. Oh. We'll stay with the 67.40, but on the support, decent chance to go on and pair back, and that would come into right here. Let's extra right there. To be 66.39. And on to the dollar CAD. The dollar CAD closed a weekly chart with a medium-legged doji. The pair not only defended 29.82, but managed to close above 30.46. The pair is open to a rebound. Immediate resistance will be 30.92. We're above that right now, with a daily close above 31.57, signifying a short-term bottom in place. Support will be 30.11, followed by weekly support 29.82. So needless to say, the resistance is going to be 31.57 with a daily close above that, which would mark a short-term bottom. And take a look at a 2-hour. Right there, 30.71. Tightened it up pretty good. And on to the dollar peso. So the dollar peso tested weekly support level 21.47, closing just above. Two consecutive daily closes will, below that will target a test of 21.20. Resistance will be 21.72 with a daily close above, allowing for a short-term bottom. So 21.72 on the upside. And we'll go with 21.54 for support. On to the dollar yen. So the dollar yen closed the weekly bar on a positive rebound. Resistance will be 657 with a daily close above that, signifying a short-term bottom, opening a further move up to 749. Support will be 562. So 657, but we can probably tighten up that support level though. And on support, we'll take a look at the 2-hour. $603. So the dollar weekly bar posted a bullish cloud cover over the allowing for further upside over the next week. Resistance will be 93.39 followed by 93.87. Support will be 92.35. So for immediate, it's going to be 93.39. And for support, right there, 92.67. And onto the cross rates. Fairly quiet here in Kiwi. The Kiwi saw a reversal on Thursday before recouping some of its losses on Friday, but failing to close above 71.40. The pair is open to a further pullback to 70.59, which would be close to a 50% retracement from its recent run. Immediate resistance will be 71.60, with support at 70.93. Into the euro yen. Same here, relatively quiet range. The euro yen saw a strong rebuke of the weekly resistance level of 26.54 for a second week in a row. The pair is likely to fade back to 24.60. Actually, we have. Now we're at 24.54. We've actually pulled back a little bit. For a test of the conviction of longs, resistance will be 26.31. We can see we did go on pair back even a little bit further beyond that. So let's take a look at a 2-hour chart. See if we can see something a little bit closer. Right there. Which would be 25.24. It's already fallen quite a bit though, and they're trying to make a stand here. Let's go right there with 25.36. And resistance would be right there, 26.06. The euro saw a nice rebound on Friday. Initial resistance will be 63.40, followed by 64.10, which should see some pushback up to 64.55. Support will be 61.98. So that was coming to Monday. We actually dipped a little bit further here, and you can see here, right there. You see that close right there? So that would be 61.81. And on the upside, right there, you see that? That's going to be 62.66. And going to the Euro Kiwi. Euro Kiwi has fallen in 6 of the last 8 trading days. The pair is up. Up on a stand on trying to make a stand on Thursday. A minor recovery rally is reasonable. Resistance will be 77.15, with support at 75.43. So 77.15 on the upside. And support right there, 75.51. And on to the ASEAN. The ASEAN struggled last week above the 76 level, nearly closing the week with a gravestone doji. Support to start the week will be 76.84, with resistance at 77.76. So that's good there. And on to the guppy. And we have seen sterling struggling. We've seen this further dip back here. Let's take a look here. The guppy challenged the weekly major level of 40.97, but pared back to finish below on Friday. Resistance will be 40.97, followed by 41.36. Support will be 39.40, which we're there right now, followed by a pivot at 38.06. So 39.40, I'm going to stick with that. 39.40, we're there right now. And resistance, right there. That will be 40.61. Starting on. Starting out, continue to push higher, taking out stops above 82 cents. The pair will find resistance at 82.88, followed by 83.30 with support at 81.60. Well, we've already taken that dip low here because obviously the weakness in sterling. So right now the support would come in right there, right here. and that would be AD12. And resistance, we'll take a look at a 2-hour chart, which would be 8063. There. Actually, 8064. And we'll just take a quick look into the indices. We've seen NASDAQ rotating lower. In fact, seen a pretty decent little sell-off here after that rebound. See into Asia and another test. You can see that it was really struggling right here, trying to make some move. Made one last hurrah. Same thing here, but this break was pretty forceful. I was testing actually just right below this area here. Same thing here with the S&Ps, although the S&Ps appear to be holding up a little bit, faring a bit better than the NASDAQ. The same area right there. And take a look at crude oil, still pretty weak, really leading the charge down here at 38.40. And then lastly with gold, still holding well above that 1922, that key significant area here. But you can see here with NASDAQ struggling. I'll go and get the bias chart posted in the room. And thanks for joining us here on the European Crossover webinar.